Hi guys, Piotr here. This is LiteFinance Global YouTube channel, and again it's my pleasure to be with you. Well, some time ago we were discussing the grid trading, and well, I would like to get back into that topic with a little bit of the twist. It might not, for some of you, it might not looks like usual grid trading, but I truly believe that is going to be useful for some of you, so you may add this into the trading arsenal. What we are going to discuss is a little bit of the well, as I mentioned, a little bit of the grid trading with the twist, meaning that we know where we are wrong, right? Meaning that we are not building infinity positions in one direction, but we want to see what is going on based on the price action from the higher time frame and trying to build some kind of the grid. Well, we are going to focus on the eventually, if something is going wrong, max 3 positions with the stop loss. All right, the stop loss is calculated specifically just to avoid the situation and avoid the ruin the account, avoid the situation that we don't know what to do if the market constantly is going against us. All right, so in that case, because it's from my perspective, it's mostly based on the price action and day trading. So we are going to find the attractive levels, right, from the 1 hour chart and trying to look the price action on the 1 hour chart, and then again on price action on the 1 minute chart for execution. All right. Before we are going to do that, let me try to explain the specific stop loss and how it should work in our favor. So as I mentioned, we are discussing 3 positions, right? We don't want to lose more, and that's my approach, more than 0.5% per whole block, right? And I would like to know that my first position in total, if we are going to be wrong and market is going to prove that we are wrong, my first position, the total loss is going to be 0.1%, right? The second, right, is going 0.15, right? Total loss. And the third one is going to be 0.25, right? So as you can see, in total, we are talking about the 0.5 per, let's call it, grid, all right? So briefly, and then we will try to find some examples, all right? Briefly, how this should look like, all right? Well, okay, I see that, for example, market is going strongly to the downside, right? From here and here, we made the lower low over here, all right? So if the market is going to get back here, I want to switch to here or here. I want to switch to the 1 minute chart, all right? And I'm going to start to build my position, scaling into the position, right? I know that, for example, I want to be wrong, meaning that my stop is going to be above this level, all right? In that case, if I'm going to start the build the position, building the grid, scaling into the position here, right? So I know that my stop is going to be here. And the whole position, because I know in advance, right, that from here to here, right, the size of the position in case of the stop loss should be 0.1%, right? Hopefully that's clear. Then the next one could be short somewhere here, right? and the next one I might add, for example, in case of the failure. All right, don't forget that we are talking about the 1 minute chart, so we might adjust the stop loss based on what we see on 1 minute chart. Don't forget. All right, so if second position is going to be 0.15 as a stop, right, and the last one 0.25. okay, well, what's my target for this? Because it's a aggressive approach to day trading, this 0.1 I'm trading, or I'm trying to trade, all right, $1.5R, all right. If I'm going to be filled with my second order, all right, if I'm going to be filled with my second order, I wanna see at least move back to entry of the first position. Why? Because if I'm going to close my first position at 0, right, I still got 0.15 from my second position, all right. That's, but of course I'm going to watch the price action, because that's based on the price action, all right. So let's have a look what we have, and if it was possible to try to join the party here. Let's switch to the 1 minute chart, all right, and what we are looking for are the boxes, all right, specifically, all right. So in that case we might try to adjust to what we see, what we have, and how we might behave, right? So in that case, as a number one, for example, is this strategic consolidation. Why is strategic? Because on that particular low time frame we made the lower low compared to from where we move higher, right? So in that case I would start to build position somewhere here with the stop again above the levels we were discussing. In case the market would go higher from here, right, I would add into the position somewhere here, right? But as you can see, the move to the downside was quite dynamic and quite significant. The same way is going to work in case of the rising market, right? And we are buying the pullback, we are using the so-called grid to build the position into the building the long position within the direction of the trend from the higher time frame, all right? As I mentioned before, we might use 1 minute chart in that case, right, to build our stop, especially if the price is going in our direction. So once we got back below this level, right, the stop could be lowered to the downside, all right? Well, it's quite significant and useful because if it's done properly, all right, so in that case here I strongly encourage you, do your own research, do your own homework if this particular strategy may work for you. But at the very beginning, if you are going to start your position, the first one, right, you have to have your stop based on the higher time frame, all right? Then you can start to work with the price action from the lower time frame, all right? That's the key here. Working with the money management is very, very, very important, right? Another thing, if we know that that's the strong level from the early chart, we have the failure, right? We might use that line if it's going to be retest also to start building the position, all right? Then again, if another level is going to be stop out, you wanna see another short and again higher. Again, it's very important to understand that we are taking the levels at the very beginning from the higher time frame, then switching lower to 1 minute chart, for example, or 5 minute chart if you wish, and trying to work with the execution on the lower time frame, right? So I switch to the 1 minute chart here, right? It's gonna be probably easier in that case, and that's what we have. That's what we have here, all right? In that case, taking into the consideration only that particular price action we've seen, so I know that the market tested the particular level. I know that if we are going to go higher and moving lower, that's gonna be my first entry. But here, as you can see, market went lower. Then again, right? I would be happy after the pullback to open again, and that was the second entry, right? And then suddenly, boom, even two positions were in profit, all right? So take into the consideration money management, take into the consideration the levels, important levels, price action from the higher time frame, then switch lower and look for your entries. With that being said, guys, wish you great next trading day. It was my pleasure to be with you. All the best, see you around, take care, and goodbye.